Hey, good morning, folks. It's the one and only V, the Guerrilla Economist, and we have with us the one and only Cowboy, aka the Professor Extraordinaire, and we are here at Algo Factory Tech, live lab for free. And look, if you're listening to us for free, you're checking out the live labs, don't hesitate, don't propagate, don't procrastinate. Join us at Algo Factory Tech. Be part of the last exploit you have. We're the last one standing. With that being said, Cowboy, what's going on, buddy?
Man, I've been trying to juggle a lot right now. There's some stuff in the background that we're working on on the cryptocurrency side, and so what it's had me do is getting up instead of my regular, 5:00 a.m. or whatever it is. I'm getting up at like 3:30, and it's an interesting thing. You know, I had a routine. Now I've switched it up, and what I've noticed. Whoa. Oof, man, brutal. What I've noted. Oh, look, we lost V. Hold on a minute. We lost you for a second, V. You there, V? Looks like somehow we lost V. So what I'm gonna do? Oh, you're there.
Yeah, I got a storm ripping through the area all of a sudden. So
you got a storm. I had to sneeze.
Maybe it's your sneeze that took me out. That probably not. You probably crashed my network.
Yeah, I guess Joaquin Phoenix had a power outage too this morning too. In the middle of his show, he had to cut it early because I listened to him. It's well timed. I can listen to his live show.
I'm still waking up. So when you said Joaquin, I'm thinking Joaquin Phoenix. You say Joaquin Phoenix?
I might have said Phoenix. I meant Flores.
You did say Phoenix. I was like,
I did say Phoenix. Yeah.
Yeah.
I meant Joaquin Flores. Talking about waking up. But see, that's the thing. I woke up later today. Instead of my usual fucking Phoenix, Jesus Christ. Instead of my usual 3:30, I woke up at a later time today, just because I could or whatever. But what I noticed about this earlier wake up is I get hungry 2 hours earlier, right? Like,
yeah.
I think we forget how much energy our brain takes up.
Right.
And this is all brain work. So it just goes to show you, like, I mean, even if you're using your brain a lot, you got to make sure you have proper nutrition.
Right.
So I cooked the sickest short rib, dude. I smoked it for, I did a rub, and then I smoked it for a couple hours. Mm-hmm. It was supposed to be for like 3 hours, but my Traeger doesn't go low temperature for some reason. There's something wrong with it. So I took it out after 2, and then I oven low cooked it in a wine, garlic, rub and butter bath, and I cooked it for like 2 hours. Slow cooked it, low temp.
God, man,
dude, that's
better than having a Nathan's hot dog with ketchup.
Dude, that's better than eating a single French fry. Yeah. That's no, it's dude.
Now you got a Traeger, you're hardcore, bro.
What's that?
You got a Traeger that you're hardcore.
Oh, I don't mess around.
I hear that. I gotta come over to your house.
The hell yeah. You know what I did was, because, there's just 2 of us usually, and, we have kids now, but, it's not like I have a huge group of people coming over all the time. I got this Traeger that, it's like you can move it around with you. It's probably about 2 foot wide, maybe 2.5 foot wide by 2 foot deep. The hopper is inside of it. It's like a square, and you open it up like a big giant, kind of like a suitcase. Nice. And you can take it with you places. Comes in a giant bag, and like if you had a deep cell, like a marine battery, you could run that thing for like 12 hours. You just you take it camping with you. So yeah. Anyway, I do a lot of meals on that thing. So we did that. So yeah, that's what I got waiting for me. But I had to eat. Like, I've been having to eat early now. Like, as soon as these shows are over, I have to go freaking scarf down because I'm like starving. It's crazy. I'm not used to that.
Yeah.
I condition myself not to need food like that, so
it's like dinner time for you. That's why you're waking up at 3.
Right, yeah, exactly. It's like lunchtime. It's freaking 9 a.m.
That's nuts, brother.
All right, so what do we have today?
Today is another slow day in the market. You want to park it?
Definitely. Let's see. Yesterday it was pretty crazy. I had a lot going on. unemployment rate, non-farm employment change, average hourly earnings. That all
Low,
stuff
baby.
just came out a few minutes right as we started the show.
Yeah.
That stuff came out, so that's why we can
what's it
kinda,
at right now?
let's see. Oh, what just happened? I was looking at the wrong day. July 28th. That's my brother's birthday today. Actually, what we have today is core PCE price index, month over month, no change. And then employment cost index. Employment cost index quarter over quarter. Looks like that went down. Employment cost index went down. So what is that? How does that affect? What in the world's going on with this calendar, man? It's killing me. Okay, the change in the price of business and government pay for civilian labor. Actual greater than forecast is good for currency. So it looks like supposedly businesses and governments are paying a little bit less quarter over quarter for their labor, which is not good for currency, which usually means that things would, in this case, rise up against the dollar, according to that news. And as we started, I was looking at the euro versus the dollar, and I was thinking about taking a trade, and I said, this doesn't look good. Like, it popped up, but it was already on. Like, it wanted to go down, and sure enough, I'll actually show you all what happened here. It was right as V and I were kind of chatting before we came live, because we just came live a little bit later today. We're busy mumble rapping together. We're gonna create a mumble rap group
based on heart medication.
So you should
for high cholesterol.
Do our key moment in the song. Go for it.
Maybe after. That's only for the members, man.
That's for the members only.
Members only. Bro.
Would you? Let me go ahead and share the screen here. We already have lyrics and everything. It's great. So yeah, what you're looking at here is that wick upward was the news, and the news supposedly was supposed to be bullish for, say bearish for the dollar, or bullish for the euro in this case, or like if you're looking at other assets like stocks that are traded against the dollar, those are supposed to go up. Like if I took a look right now, just real quick at the SP 500 on that lower time frame, we'll probably see something similar to that. Yep, look at this. This is the SP 500. Let me expand it to make it visible. And you see that big wick up, same exact thing. So the stock indexes, that's the EURUSD. What the hell? I'm like, that looks really similar. Let's do ES. Let's do that. Okay. Well, those are still rising. Wow, that's healthy. So looking at a 5-minute chart.
Yeah.
But yeah, equities are on a tear. And we talked about this, I think yesterday we charted equities. They're kind of sitting at a prior resistance, or they're moving up towards, there's like a mini sort of resistance right here. So it's a 5-minute chart. Let's go to a higher time frame. Get a real read on this. So I know there's a lot of news about the stocks right now, and as of now, price did reject at this resistance, came to it as my charting did predict weeks ago. So yeah, I mean, what's going to happen here is price going to potentially come back down to retest this area. That's quite possible. You could see price do that. It seems like they're really trying to push the equities up, though. It seems like, every day in the news is a new local high. You know what I mean? Like they're kind of. It seems like equities are being pushed up. We talked about it yesterday. That's the whole conversation that V really had yesterday. Had to do with the fact that they need to, really inflate the market. Otherwise, basically, there's no yield for these guys, and the financial markets die. So we could be in the midst of one of these run-ups. But remember, and again, this is just a quick little repeat from yesterday. This could happen what I just drew. There's a lot of things that could happen. Could be that we see, a consolidation below this line, just right here, and then maybe a pop upwards. That could happen as well. Remember, our all-time high was around 4,800, if I remember correctly, on the S&P. And of course, all the other stock indexes have similar charts. But if we go back in time, we can see this is our all-time high. So, I do expect at some point price to reapproach that because things are just bullish right now. It could come down to test what I just drew down here and then run up to hit that. It could simply go up towards that. But that's what I'm expecting just based on the way things have happened in the past. And the way that the algos are saying, things are bullish right now. It's just how it is. So that being the case, buying pullbacks right now is one way to go. But if you are trading the indexes, one thing to consider doing is looking for price to break above before you get in. That's one thing you can do. You got to do whatever your algo and research tells you to do. I'm just telling you how I do things. And in this case, look back here. Let me zoom in to the past and imagine if you were going to buy the breakout, right? So here is the prior high right here, right where that M is. I'm sorry, what that really is that's Roman numeral 3 with an arrow through it. So right at this area, price made a high, and then you're like, okay, I'm going to buy the breakout, and you bought the breakout here. Now you got to sit through a pullback, right? But then it's like, oh, okay, I'm going to buy this breakout. Now you got to sit through a pullback, right? Oh, I'm going to buy the breakout. Now you got to sit through a pullback. So, I mean, if you're okay with pullbacks, then okay, that's one way to go. If you're in a bull market, then you're basically building a position, but you might not have the money to build a position. Maybe you just went all in on the breakout and I just got to sit for 2 months and wait for that to happen. Okay. And that's fine. A lot of people who play stocks do that, but if you're trading indexes, that's not necessarily the way to go. Right. So what I do in this case for indexes, especially because historically they just work better this way, you wait for a breakout and a retest where price actually bounces off somehow, one of these highs, right? Or if, you could also look at it as this is the new high or that's the new high. And if you have a breakout and a pullback, the pullback happens above the high, then you've got a decent entry. They kind of changed trading view on me. So you have a breakout up here, you got a pullback, and then you have a breakout. So you could always enter right here. And then it's above this kind of, that major, above this bit of structure right there. And then you can, get your long there. Of course, another, you could get trapped into the thinking of, okay, well, this is a new high and now I need to test that. And, there is that trickiness in the game. But in the end, it's just, in the end, if you have an algorithm, then you're able to actually determine that the higher time frame is bullish, and then you see a pullback, and then you can use that algo to determine that this turnaround is in a bullish higher time frame, and you can just enter even down lower. But remember, if you enter down lower, you're taking a bit of a risk because you have structure that is in your way. And in this case, there are lots of structure in your way. You got this high, that high, this high, and now this high. So if you enter down here, you have to break through all that structure, right? So anyway, that's just that's a way to trade these indexes. And again, I can do this because I have algorithms telling me that the market is bullish and the high time frame, and I have algos telling me, okay, this is a turnaround in price. That's how I roll. That's how we trade the indexes. So let me take a quick look at the comments. I know we haven't done our usual thing here. Valley Girl, a philosophical Friday to all the YouTube groupies out there. Yeah, why not? It's Friday. Friday is a day that I don't generally do a lot of trading. Not usually. I'll do some day trades. I'll hop in and out. Grab a quick $100, but 150, $200, depending on what the look is. But entering with $1,000 trade on a day trade on a Friday is just not. It's not the way I roll usually. And generally my, larger trades are going to be swing trades rather than day trades. Day trades are going to be a few $100. Swing trades are going to be higher. And that depends on the book. If I'm trading a larger book, the numbers are going to be larger. Just depends on which book I'm trading that day. So, but let me go ahead and put the website there. We haven't done that. We haven't even done the whole, this is what we do, spiel. But I will put our website up there. Obviously, you can tell that we talk about trading. We help build traders. Everything we talk about is for entertainment and educational purposes. So before you trade, make sure that you talk to your licensed investment advisor, and that way you can understand what the risks are, because you can't lose your money. So there's our website, www.algofactory.tech. And then, of course, here is the QR code. You can just zap that with a QR reader, whether it's on your phone or computer, and that'll take you over to our website, show you what we do. We can tell you that people who work with us, we help them build trading algorithms. Algorithms are nothing to be scared of. It's just a way to trade. It doesn't mean your algo is coded. It doesn't mean that, it's like, oh, I got to know how to program things. It's not like that. Anybody who is successfully trading is trading an algorithm, whether they know it or not. Even if you're old school trading, there are algorithms involved. Tying your shoes is an algorithm. Driving to the store is an algorithm. It's just a word that gets used a lot these days because people, it's on the news and people are using algos for this and that. But in reality, algorithms have existed for hundreds or thousands of years. Anytime you're doing anything, that's a process. So that being the case, we help you learn how to trade, basically. We can start you from scratch. And here's one thing to know is that it doesn't require you to have a whole bunch of money. People, let's just say that you feel that you want to have a trading account of $50,000 before you trade, which is a pretty big account for a new trader. It's very big for a new trader, right? Having a $10,000 account is kind of a decent number to start with. Even $5,000 is doable. But at that point, it's more of a supplemental income. And it depends on your trading style and your abilities. Like there are people who, if you're just an elite badass trader, you can take $10,000 and make enough money to pay some bills. But you're at that point, you probably have been trading for a long time and your account's bigger anyways. But a new trader, if you have an algorithm and you're getting a few trades a month out of it because you're kind of new and you haven't really fine-tuned it, or even a trade or two a week. Look, a decent sized account, you can get yourself money to pay a car payment. You can even supplement income. And if you get good enough, and if you care to, you can make that your living. Although there are a lot of kind of professional traders who feel that having multiple streams of income is a good idea because, if you run into trouble, then you're not living and dying by the trade, right? So there's a lot of ways to go about this, but let's just say that this is what V talks about, and maybe I'll just let him talk about it. But V, why don't you expand on the whole idea of what you can do as a trader, even if you want to keep your job?
Yeah, if you want to keep your job because you love what you do, and there are people that love what they do, and you want to. The beauty of trading is this. My God, think about it. I go on the low end, and I say if you could scalp $100 a day, that's $3,000 a month. $3,000 a month, and this is not even talking about compounding. And $3,000 a month, that's $36,000 a year. That's nice, man. Think about it. Maybe your job provides you with enough income where you're not only covering your bills, but it gives you a nice cushion to live a good lifestyle. And so you have nice things. You probably have a nice house. But imagine if you another $36K. That's, you don't want to. You're already good on your other investments. You probably want to trade some crypto and stuff on the other side. Maybe you're good on, let's say, your retirement, all that stuff, whatever, right? But on the low end, $36,000 a year. That's pretty nice. That's a Lambo payment, right? That's a Lambo, Huracan payment. That's a Ferrari F8 Tributo payment, right?
That's a kid's education payment.
That's a kid's education payment. That's a nice vacation. That's, maybe buying a lake house. The possibilities are endless.
Or in this current environment, that is a nice savings for retirement.
Bingo. Exactly. 100%. And so that it gives you flexibility. Like if you get another additional $36K, that means now you could probably start offshoring, take care of some of the costs of that. There's so many avenues to this. It's really remarkable. So the possibilities are endless.
I was leading to, and I'm glad you said all that, because here's another idea. What if you're a pensioner and you want some extra money? You have to be careful. You have to talk to your investment advisor, because if you're on a fixed income, you want to make sure that whatever you're doing with your money, you don't lose it all, because that's the That's the thing. And so, what we teach
Right.
a lot of money management. We teach ways for people to look. 90% of traders lose 90% of their money in the first 90 days, specifically trading Forex. And I'm sure the numbers are similar to crypto and, anything else. So the thing to understand is that, most people get in without any guidance. And again, we don't offer any investment advice, but what we do is we show you what we do to preserve capital, what we do to be conservative, what we do to make sure that we don't blow up our account. Because blowing up your account is a bad thing. I know modern parlance, blow up the spot. Like that's not, that's we're not talking that way. We're talking the old way. Blow up is bad. So at any rate, one thing to know though is that even if you don't have any seed money for an account, there are what are called proprietary firms, and they're all out there. You don't have to have any licenses or anything like that. And if you can spend the time to build and test an algorithm and even trade a small account and become successful, then what you can do is apply to a proprietary firm. You take a simple test. They have you trade for them for 1 or 2 months or whatever it is. And you have to follow their rules. There are some rules. You can only trade a certain amount. You can't, some places won't let you trade news events. Some will. And then if you can pass their test, they'll give you an allocation. And it might cost you 100 or 2 or a little more to take their test, but they might give you, 50 grand, 100 grand. So, it doesn't mean that you have to have like, $20, $30, $50,000 just to start doing this. You can actually learn how to do it, take a test, and then be given an allocation. And that's very common out there. So I know a lot of people ask, hey, I get the emails like, how much do I need to have to start trading? I'm like, actually, well, if you want to trade your own funds, then a lot of people start with about 10 grand. But you don't necessarily need that. If you can learn how to do this, proprietary funds that will, they'll get you an allocation if you pass their test. So that's a very common thing to do. We don't have any proprietary funds to recommend, but there's a lot of prop desks out there. So do your research and find a good one. Yep. So V, we're at the end of the free to the public.
Yeah. So guys, listen, look, don't sit on the sidelines, let money pass you by. Learn how you can profit from the market, whether it's crashing down or flying up or imploding upwards. You can make money doing it. Come join us right now over at Algo Factory. The link is in the description box, and be a part of the winning team. With that being said, the Cowboy, let's get into it.
Okay, we are now on Telegram only.
All right.
We had a question here last night, although I think Valentine covered it. She got it figured out. Valentine 828 was having a problem. Excuse me. She's having a problem setting the color for her indicators. So I think she was actually working MACD. That's what she's trying to figure out, how to change the colors on, I think, if that's what I understand correctly from her question. So I'll just go briefly over that right now. Let me go to the friendly chart and show you guys. Look, I find it important to change colors, right? Because red and green are like good and bad. I mean, that's a natural thing. You got red light means stop, green light means go, red means blood, green means money and plants. So, we have these associations with colors. And so I like to go ahead and, get rid of those. That's why you have me seeing, like purple and white. And that last chart was like purple and blue. And it's also kind of fun, right? Your own color palette, stylize your chart, personalize all that. So here's how that can be done. Let me add MACD just so you can see me change both the candles and an indicator. Okay, so let's maximize this screen here. Okay, so the candles themselves, just double click in the candles, right? And there's your colors. You got a candle body, candle borders, candle wick. Right. So if I want to change the body of my candle to say, instead of green for good, I want, we'll say, I don't like yellow too much, but we'll say blue for good. And we'll keep the wicks at white. Okay, here it is. Valentine says, I know how to change colors. I was trying to get the Elder Impulse system blocks. That was part of Elder Force. It wasn't. It was a different indicator. Yeah, it was MACD, right, Valentine? Is that what that was? So, and then we can change the red to something like orange. So you see, that's this color is going to look better, and you can do that even on an MACD. You just double click it. You can do it with like some of the Elder some of the Elder neutrals are white. I prefer it to be blue. I don't like a lot of white on my chart because it's hard on the eyes. MACD. Yeah, it's right. I don't like white. What can I say? It's racist.
You're racist.
I'm a racist. White people are bad. Let's see here. Damn white people. Green can turn into blue. Red can turn into orange. Like that. See. So now, of course, MACD now matches that same theme. And then we can right click and make all the indicators to the entire layout. And then for the settings on the candles, it's a different thing. You right click on the screen, you go to the settings button, you get this, and you go apply to all. That'll change the candles across the chart, right? And then if you want to, like if you're doing a multi-time frame chart, the last thing you want to do is to go to every, like let's say I have 5 screens here. Do I want to go 5 times and change everything 5 times? That is a negative. Do not do that. You're wasting your time. So what I would do in that case is I would change one indicator, and I would right click and apply these indicators to the entire layout. And then it'll just change them all for you, and it'll make everything uniform. Obviously, for the candles, once you go to settings, then you apply to all, then you go, then you're good right there. And it's already done it, but that's that. So Valentine says on the 26th, I used 2 indicators, Elder Force and the Elder Impulse, which had those red and green blocks showing the long and the short. Yeah, okay. I see. So you were simply trying to find that indicator. Yeah, that's Elder Force is the one you actually see there, this red kind of line right there. Yeah, and Elder Force is a great indicator. We obviously built an algo based on that. And that's I was kind of looking at that over the weekend too. I'm sorry, over the last few days, not the weekend. I don't know. I didn't even know if it's a weekend anymore. That's where I'm at with my work lifestyle. I don't know what weekends are. Yeah, there's a couple ways to look at that and use that Elder Force. So it's pretty good stuff. The one thing I did find with Elder Force can be used, especially on a higher time frame, for bias. So let's go actually to the higher time frame. So we'll look at the 3 hour. If you know the way the MACD works, and we're combining MACD and Elder right now in this little mini algo, if you will. MACD, when the histogram goes below 0, like this orange right there, that means that the MACD line has crossed the signal line. The signal line is this orange line. And the signal line is a much more stable line. It's a farther look back. It's a look back of 26 candles. It's a more smooth moving average because you're gathering data from 26 candles, right? When you're only gathering data from 12 candles, it's going to be a lot more jagged, which is this blue line. And it's just a moving average. It's all it is. And so what's happened is that the faster moving average, looking back 12 candles, that's going to change more quickly because you're looking back not so far. And when that crosses this longer, smoother moving average, you get a change down here. And this histogram on MACD, these lines right there, if you will, all that is just a measurement from between these two lines. So the farther apart these two lines get, the deeper these histogram get, right? And then of course there's a little bit where it gets shorter right here, so these get a little shorter, and then it's kind of moving back and forth. So you see these moving back and forth. And what that means is that when this is expanding and these colors are darker, price is moving in a significant way, or at least price is trying to move in a significant way. In this particular case, it did not happen because there were still some higher time frame forces pushing it upwards. But by the time those higher time frame forces went ahead and did their thing and it was over, there was one last push, and then the signal line and the MACD crossed this 0 point and things became bearish. So you'll notice that with MACD, whenever you have the actual MACD line, the blue line, whenever that crosses 0, that usually means that there's a pretty big, change in, say, bearish versus bullish, right? So let's go ahead and test that. 1, 2, 3, 4, 5, 6, 7. Okay, so we got about 8 or 9 tests. Maybe 10. Now, it doesn't work every time because nothing does work every time. But let's go ahead and open up our price a little bit. And here we have where price crossed into and above. Price was heading up. It did get crushed. Price came back down, headed down a little bit. And then here's an example where price crossed and went up and you had a nice long, beautiful long, right? So this was a successful trade, if you will. These other two, not so much. But one thing you can do on that is you can sort for volatility, because when things are more volatile, these trades are successful. This is unsuccessful. This is not that successful. This is probably successful, but it's still in the middle of the chop. So you'll notice that when we test these, if you're in a choppy period, it doesn't go so well. All right. So what you do in that case is you wait for a trend. And one way to do that is with ADX. So let's get out our square. I hate when they do that, dude. TradingView moved like these things around. So, what I'm used to doing is no longer there. All right, so this is in the chop right here, right? And this is in the chop. So it's, at the end of the chop seems to be when things go well. So one way you could do is use this as breakout trades, right? So let's just say you have a long cross, and then there's a rejection, right? And you've built a range. Well, you have another long cross, right? And then before there's a short cross, price breaks out of the range and MACD stays above the 0 line right there. So that could be your long signal. You look for a pullback and you enter. Here is another bit of a range where price starts to bounce around. And then here, okay, so you had like a long cross. It barely touched, came back down. That's not a successful long. Here is a long cross on the MACD and you just bounced off the top. That's where you kind of created the range. And then here you have a long cross right there and a nice long once again, right? So one way to have some idea of whether or not price may look, when this first happens, you don't even necessarily know that you're in a range. That's the issue, right? So you don't find out you're in the range until it's bounced off the bottom and the range is created. So it's kind of like, oh, how do you know you're in a range? Well, one thing you can do is look at market structure, right? So there's a decent amount of price action back here, and then price heads up and returns to that area. So market structure could tell you that, hey, price might hang out here and then head up. And we do that in the way we've always done that here, is that we look at the prior impulse, right? This is our impulse on the higher time frame. And then we use a fib to get some general idea of where the 618 is, maybe the 786. 618 is right here. So once price kind of not the 618. Once price kind of comes into that 618 zone, you'll notice that also is where old price action happened. This old pivot right here. And you have actually a few pivots back in this area. So you have a pivot here, pivot there, pivot here, right? That's also the 618 on this impulse. So you have confluence, right? You have structure, you have 618, and on top of that, we're going to go ahead and do our fixed range. And we find that the point of control is right here. So this red line is right at that prior 618. And that's just based on this action right here, on this down impulse. So actually, what we will probably not, that was wrong. Sorry, everybody. Ignore that fixed range. We're doing a fixed range on the actual impulse. My bad. So let's do the fixed range on the proper impulse, because we're pretending like we don't know where this is going to end. So, all right. And usually in the fixed range, price will be attracted to the point of control, right? And it will be repelled by breaks in the volume. And you see where there's a, let me zoom in a little bit on this fixed range to help out, for the peoples. So you'll see here, looking at prior structure, we have a big gap right here, which is where there's a good chance price will not want to go past that. So, this just to review, right? We're looking at a trade. We're looking at trades. I'm gonna do a bit of a like this. We're gonna do a review. We're looking at using MACD crosses, and we don't want to do any kind of MACD crosses that are inside of a range necessarily. And how do we know a range is coming? We look at the past. We do an impulse. We look at the prior impulse. We get a fib out. So the fib 618 is kind of a decent area to look at. And then we do our fixed range. And we also look at prior structure. So we got prior structure, 618, right? And then we have our what do you call it? This gap in volume to know price is going to do that. So now it's like, okay, I know that there's a decent chance that price is going to stop dipping in this area. And on a higher time frame, if we were to add, say, a third panel and then apply these indicators to the layout, we might also notice that right here on this third panel, which is going to be, let's see here, we'll make this it's already the 18-hour. That's good. We're going to expand the third panel, and the area we're looking at is right here, right? This is that block, and you'll notice that the MACD on the higher time frame went ahead and started curving up and crossed. So you're already starting to be in positive territory on the prior time, on the upper time frame. The MACD has crossed. It is now moving towards bullish. The actual signal line, it's hard to see because of that. Let me move this back here. The actual orange signal line has even started to curl up, right? So right in that area that we are kind of thinking about taking along, there it is. We have structure, we have fibs, we got volume, whatever you call that thing, the fixed range, got everything, the confluence, and higher time frame. We got MACD curling upwards. We have every reason to think that there is a long that's going to happen in this area somewhere, right? So there could be two ways to do this. You can take the next MACD cross, right, and just use the bottom of that range as a as like a stop, like the most recent structure. So if we hit the play button, okay, now we look for MACD to cross or at least touch the zero, and there it is. It touched right there, and that's kind of the top of here. So if you wanted to, you'd have to test whether or not this is the best way to go, right? You can take your long right at that cross, and you can have your stop loss below the recent structure, which is going to be, say, down here maybe, depending on if you use ATR, whatever your stop loss method is. And now you have to design your trade. How do you do that? Well, let's get rid of this. Get rid of this. We know it's going to go up here because we know the future, but we're going to pretend like we don't know that. Okay. So we're going to first do a fib retracement, right? What's our impulse now? What impulse are we measuring against? We're going to measure the most recent impulse down, right? Because everything that we see says price is gearing up to head upwards. We don't know that it will yet. We just have a lot of reasons that I just kind of laid out for everybody. So now we want to see where are we going to take profit? Okay. So I would do a fib retracement to get a 618, which happens to be right about here. If we just used a fib, you're sitting at pretty much a 1-to-1. Depends on how you do your stops. You know, it could be better than a 1-to-1. It could be worse. It depends on your stops. So, you know, that's one thing. It's like, okay, well, perhaps this trade isn't for me because it's not a 1-to-1. It's like a 0.96 to 1. You don't know. I mean, I'd have to get out ATR, and, you know, again, that's going to depend on your own algorithm, right? Like, you got to test this. Oh, maybe a half an ATR is good. But at any rate, this is at least a good looking functional trade, right? So what we also do is we go ahead and do our fixed range. And we take that same impulse and then we see there's we knew before that the point of control is going to be down in this area just because that's where most of the volume is right now. So, but that's not quite as important. What is important is to look at the rejection points. You have a rejection point just above the 618 right here. But you do have a lot of volume to which price is attracted. You do have a rejection point that's kind of right below the 618. So, you know, you might, if you wanted to play it safe, you could put your target below that, but then you don't have the best risk to reward ratio. So it's a little risky of a trade. But you got high time frame bias, and maybe it's just, you know, you're good with it. I don't know. Sometimes you got to take a risk. That's what trading's all about. Just take a risk. So in this case, we obviously know the future. We know it's going to work out. But what you might find is that if you're taking this kind of a trade, you might find that these trades are always generating out of a choppy area, and a choppy area tends to be choppy. So if you could be patient and wait for price to head back down to the bottom of you don't know it's going to be a range yet at this point. You think it might just go up, but as time moves on, you see that price actually creates a new low down here. Well, if you believe in your trade, you could look for a low and then look for a bounce and then have either wait for the entry right there or take a second entry to bring your cost basis down a bit. And then now, even at a 618, now you're sitting at a 1.68, right? So if you waited and you didn't take any trade at the first MACD cross and you just waited for like a bounce, then yeah, you'd be sitting at a nice 2-to-1. And if you actually took that first one and added to it at a little bit lower, you'd be sitting maybe at a 1.5. And now this is a very feasible trade even at the 618, and you can just let it roll. And then you'll see that price kind of does its thing, and eventually, in this case, it makes its way up to the target, I'd imagine. There you go. Now you're out the trade, and it's a beautiful trade. So now this is just one example, and it's built on a lot of stuff that I've done before, so I know that it would work. I mean, I have a good idea that this is going to be a successful method, but it's always good now if this is how you're going to trade. Then now you're looking at a possible good algo, kind of more of a manual algo rather than coding, because you're looking at a lot of price action, you're looking at fixed range, stuff like that. There's nothing wrong with manual. I mean, it might be that you have that 9-to-5 situation. It might be that you are somebody who likes your job, and so what you can do in that case is and Ray, I'll get to your question, by the way. I just saw that. But anyway, you might have the mentality that you want to keep your income, you want to keep your job, and that's not a bad way to go. Again, there are some traders who they really believe that trading being your only income can be problematic. So unless you have a lot of money set aside, what'll happen is if you're only a trader, and I've experienced this personally, I can tell you this is the case. And then when I heard somebody explain this later, I'm like, oh my God, that makes sense. So if you're only a trader, then you live and die by the trade. And what if there's like a real slow time and there's no trades, but you need to make some money? You start taking trades you're not supposed to take. And then instead of preserving capital and moving forward, or at least not moving backwards, you start to move backwards. So as a trader, I do always recommend, and you know what, dude, I mean, V, how many streams of income are you and I working on at once? You and I, just and forget everything you're doing. You're working with all kinds of people, but just you and me, you're working on like 2 or 3, right?
Easily 2 or 3.
Yeah, closer to 7. Like, I mean, we got deals that we do. We got this. We got some other items in the background. I mean, I can think of 4 right off the top of my head, right?
Yep.
So, you know, it's you gotta be a hustler, people. You gotta be a hustler.
You have to.
Yeah, we're, you know, what do we say, V, about the rich and the poor?
Well, yeah, the rich have a hustle and the poor have a hustle. The middle class is a sucker. He gets screwed on both ends.
And it's voluntary.
It is completely voluntary. There's no reason for it.
Yeah,
I'm gonna play by the rules. I'm gonna cross my T's and dot my I's, and yeah, no, you got to be a savage when it comes to your income.
Yeah, the rich are rich either because they're born into it or because they have a hustle.
Yep.
If you're born into it, there's a lot of people born into it who also have a hustle because their parents were hustlers, and that's how their parents got rich. So then they continue to be a hustler.
Yep.
You know, there's
Exactly.
There's an interview with Russell Brand. I like a lot of the things he's saying. He's funny and he's very well. Russell Brand has a really good vocabulary. He's a pleasure to listen to. But
He is.
He interviewed Tucker Carlson, and they were talking about. You saw this interview?
No, I didn't.
Well, he interviewed him.
But I'm aware of it.
Mm-hmm. Yeah, no, it's killer. I mean, I listened to they have some good clips on YouTube. I'm gonna go over to Rumble and check it out later. But you know, he interviewed Tucker, and so they were talking, and you know, Tucker's talked about Trump, and he said, and also about RFK, and he says, you know, the thing about Trump is a lot of people like. He kind of turned this whole idea on its head about, like, you know, because he also comes from money. He's Tucker is heir to the Swanson fortune. But basically, he says, you know, he respects Trump's opinion on the system because Trump actually has experienced and benefited from the system, right? Yeah. So you have all these people that want to talk trash. Oh, he's a billionaire. I got one buddy. All billionaires are bad. I'm like, motherfucker, you're so stupid.
Oh my God.
He's so stupid. All billionaires are bad. Okay, dude. Okay. I suppose that's like a form of racism in a way. Like it's a form of bigotry.
It's classism.
Like,
it's the worst kind.
Classism.
It's a classism that's born from a poverty mentality.
Well, yeah.
That's what it is, man.
This is a kid that was born of the local, you know, ethnicity that tends to be kind of like looked down upon in his mind. And, you know, maybe back like 50 years ago, they were looked down upon, right? Now they have all the advantages, you know, in the workplace. But anyway, he was born of that, and he was raised like he went to a school. He got into a rich kid's school for free. So he's one of these people who was poor but had rich people around him. So he's got issues from his childhood, whatever. You know what I mean?
He's got a chip on his shoulder.
He got big fucking Dorito on his shoulder for sure.
That's going to cost him. So
you know what? Here's the funny thing about it. He's a socialist. He lives in Orange County. He's one of those people I talked about in the show yesterday. Lives in Orange County in an area that is the beneficiary of decades of conservative policy. So it's the nicest area.
Correct.
Right? And he and his wife they have like $250,000 in cash they've made off the market. And they're like using that cash to like improve their nice house in one of the nicest areas. Like
he should give 90% of that away. What's he doing?
That's what I always tell him.
Prices.
I tell him.
The homeless price.
Yeah, you should be giving your money away. I mean, here's what I tell socialists. You first. You want to be a socialist? You want to give away your money? You first. Put your money where your mouth is. No, what's stopping you? Ain't nobody stopping you. Go give your money away. When every single socialist gives their money away voluntarily, I'll think about doing it. Right? Well, they had Ice-T on some news channel talking about guns. He's with some British dude like over in the UK, and they asked Ice-T. They said, well, you know, they're talking about the shootings and how, you know, it's because of the guns in America. And Ice-T goes, America's built on guns. Like, I'll tell you what, I'll give my guns away when everybody else gives their guns away. Because what's going to happen is you convince somebody to give their guns away. All those gangbangers on the other side of town, those Crips and Bloods, you think they're going to give their guns away? They're not going to give their guns away. You know? So that's why I tell socialists, you first. Put your money where your mouth is. In the meantime, you know, this kid, I mean, yeah, sure, he's got a chip on his shoulder, but he's a hustler, dude. He makes like 12, 15 grand a month. You know, he's a salesperson. He actually has a hustle. and yet he wants to like, talk trash on people who hustled. And anybody who is born into a millionaire family, oh, well, that's the only way you can ever get rich. I'm like, dude, I got a billionaire uncle who started out selling shit door to door, like vitamins, like in the 50s.
Yeah.
You know what I mean, dude? I it's in my family. Like it's, I have like 5 and I mean multimillionaires, like past the 8 figures. And they started from nothing. They weren't rich at all. I mean, that's in my family, very close to me. And the billionaire is a great uncle. So this shit's for real, dude. I'm sorry, but I'm not hearing it. Somebody saying that kind of stuff. Like, and this is the thing. We're hustlers. This is why we do this. And this trading is a hustle. It's another form of a hustle. So, you're here, we're giving it to you right now. Like, and sometimes I give it away for free, like on the main channel. Ray asks, Cowboy, how do you recommend trading a 5-minute time frame? If I use 3 screen time frames, does 5-minute screen, should that be in the middle and the one on the left, and then the 5x4 like 20 screen on the right? Yeah, that's pretty much it, Ray. If I were to trade like what I'm looking at right now, this little mini algo on the 5-minute, I probably would do like a 5 in the middle, because that's my trading time frame, and I would use the 1 minute as an entry time frame, so I'd use that to kind of time my entries, and then a 5 in the middle. And then let me change these. See how these are red and green on the right? I'm going to right click on the candles in the middle. I'm going to go to settings. I'm going to apply to all, and you'll notice now they are orange and blue on the right. Okay. So, and then on the right, I would have my, if you're doing times 5, so 1 times 5 is 5 times 5 is 25, then I would do a 25-minute on the right. And that would be my quote unquote higher time frame bias. That's how I would do that. You could use 20, that's times 4. That's fine. That'll work. You just have to test it. You're always gonna have to test everything. Generally, no matter how you set this up, it's gonna work. Even if it's 20 or 25 minutes, it's generally gonna work. But you're gonna have to test to get the refined numbers, and make sure that you're working the algo properly. So, Trev asks, shortcut. Have you noticed TV, that's TradingView, have added FRVP to the pull down menu on the left with the long short boxes? No, I have not noticed that. That's part of the things they changed. Yeah, there it is. Look at that. That's beautiful. I just don't like that they moved the long short box up. It's just I use it all the time, and it was way down towards the bottom. But here it is. Yeah, fixed range volume profile. It's nice look there, Trev. Matt Bet says I kind of like crackers. Valentine, question on what you just did. Let's say you do that analysis and you decide this is your algo. Do you then do that same analysis 200 times to determine whether you stick with it? Absolutely, Valentine. That's exactly what you do. It's exactly what you do. You do that analysis 200 times. You go back in time. Now, if you're doing it on a higher time frame, like on the daily, you might not get 200 times, right? If you're trading the higher time frame. So what you got to do then is just do 5 years of results. So you might get 10 a year. You're doing 5 years. That's going to be a pretty good sample. But if you're doing say an hourly time frame, or even the 4 hour, you should be able to get 200 trades. It just depends. Like with crypto, if you're doing the 4 hour, it might be that you only get a handful. So that's the thing about these newer assets, is that you're just going to have to go with whatever you can get, because it only goes back so far on some of those. But yeah, you go back 200 times. Okay. So, and again, Valentine, this is in the basics course online, in the essentials. But what you're going to do is you're going to back test, right? And as you back test, or it might be actually into the algorithmic structure course. But either way, you back test 200 times. You have your data, right? So what I do is when I back test, I figure out what my average risk to reward ratio is when the trade exits. So for me, because I'm having my algos coded, I will build my risk to reward based on ATRs, because that's an automatic way to do that. And just to have a quick example of that is that, a lot of people do an ATR stop. So a pretty common stop loss for ATR is 1 ATR below structure. So let's say that your algorithm says enter here for whatever reason, whatever algo says to enter there. a lot of times people will have before the prior structure right here, or even right here, this lower structure, people will do one ATR below that. So an ATR is an average true range. So you go to your indicators and you find average true range, which I have saved. And then you look at it on the bottom, and right as you're entering, you look at the number, because in real life, like, it would actually look like this. And you wouldn't know what the future is, right? So as you're about to enter this trade, your ATR is going to be like on the bottom here. You see that red line, and then you'll look to the right. You'll see that it's 1.3 pips in this case. So your ATR is 1.3 pips below here. That's a very small ATR because we're on the 5-minute time frame. So what I would do, by the way, everybody, is I add the spread to the time frame. Okay. So the spread is probably going to be like 2 pips, or at least a pip and a half. So instead of 1.5, instead of a pip and a half stop below structure, I will add another 2 pips. So that's 2.5 pips below structure. I'll show you guys that kind of on a live, not review version. So we'll review what I just talked about with the stop loss. But suffice it to say, in this case, it's 2.5 pips. So 76.7 goes down to 74.2-ish. We'll say it like that. So that, that's an ATR stop where you're doing one ATR below this structure. Now there's another way to do it that I'm actually using in my coded algos, is I do a 1.5 ATR below entry. So if this is my entry, right, and an ATR is 1.3, then 1.5 ATR is 1.3 plus 0.65. So you're basically coming up to 2 pips. So you do 2 pips below entry, right, plus the spread, which is about a pip and a half usually. So it's 3.5 pips below entry. So entry is at 1.08804. 3.5 is 1.08. What did we say? 3.5 pips, did we say? So 80 minus 70. So 764. So 767. So this is going to be 764. You tend to get a little bit tighter of a stop doing what I just did, a pip and a half below entry, rather than and plus the spread, rather than say the ATR plus the spread below this. So the ATR 1.5 ATR below entry, it tends to work out better for my algos. Maybe it won't for yours. You're only going to know this if you test it. And then, of course, for your take profit points, look, when you're trading, when you're coding into a computer, here's one thing you guys got to know, is that the computer may or may not be able, I haven't gotten into the point where I can take a look and do a fixed range and say, hey, the structure is here and all this. I don't understand yet how to do that with any kind of coding. So I just do 1, 2, and 3 ATRs from the entry. So in this case, ATR is 1.3 pips, right? So you have 804, 1.3, so 817. So your first, that's not right. That can't be right. Oh, because of the spread. Yeah. So 817, that is right. So I'll take a little profit out right here, and then another ATR. Let me see, 1.3. So 2.6 from here is going to be 80 to 83.1. So it'll be up here. And then you have another one that's going to be right about here. So the tricky thing on the 5-minute and coding the 5-minute is the spread. This stop loss is so deep because I've added a pip and a half because of the spread. And the spread is something that on the lower time frame, you're even on crypto, sometimes you're going to have to contend with the spread, especially like with Bitcoin. It might be a little bit better because the spread's real tight on Bitcoin. But let me, I've talked about the spread. So, like if I'm on the hourly though, the ATR is much, much larger on the hourly chart. So the spread almost doesn't matter, or it's not going to affect things as much. I just literally got done with my coder coding for the spread because we're trying to figure out a way to have the 5-minute chart. This is literally what I'm doing with my coder in the background right now. I have an algo. The 5-minute has so many opportunities that you want to take advantage of them, but the spread is screwing up the risk to reward ratio to where it's always in a drawdown, meaning it's not a successful algo. So what I'm having it do is, let's say that if I were to enter at market, right? Because there's the There's a spread below the stop loss, and then there is the when you enter at market, you're going to get slippage, right? So let's say I wanted to go short right here, and I'm on the 5-minute chart, right? Well, if I enter right here on the 5-minute, right now it says that the price is right here, but if I enter, the actual entry is going to be down here. So and in reality, a 5-minute trade is going to look something like this, right? So in this 5-minute chart trade, right now it says the price is right here, right where the green meets the blue. That's where the computer thinks the price is. But the reality is, if I enter, it's actually way down here. So I lose, like, I mean, depending on the size of my trade, I lose like, $20-$30 on a trade just because of the spread. So what I'm doing is I'm having my guy code a limit entry that is like maybe 1 or 2 pips below the price, so that it's not a market entry, right? I'm not entering at market. I'm entering at limit. And it's going to, obviously there will be times when the trade runs away from me, but 9 times out of 10, price is going to come back to my entry and then go, right? So I'm mitigating the spread by doing a limit entry. And if the price doesn't go back there, I just don't get a trade. But then again, if it doesn't go back there, you don't want the trade, because then you're dealing with the slippage. So these are the kinds of things that once you, and I've been doing this for so long that solution was just like, oh yeah, well, let's just do this. Like, I mean, it was something I didn't have to think about. So when you guys, by the time you're coding, you're going to want to talk to me about how to code your algo, because I have an understanding of how to build an algorithm that a computer can understand, and I have an understanding of how to take whatever your algorithm is and translate it into different kind of measurements that will work for a coder, right? One of the harder things to do is to have an algorithm that is based on price action and have somebody code it. I think it's possible, but with indicators, it's just so much easier. So, but that's something to understand. Yeah. So, I just went through a lot of stuff. Does anybody have any questions? Oh, and Valentine, before we move on, the last thing is that once you go back and you test 200 times, you're going to know your risk to reward ratio. You're going to know your hit rate, right? So that's when you come up with your expectancy. We've talked about this quite a few times, but you're going to have some data where, let's say that your risk to reward ratio, right, which is the blue and green box, is how much you're risking versus how much is the reward. Risk to reward ratio, let's just say for you, is 1.6, right? What does that mean? That means that on this particular trade, if you went short right here, and let's say this is your stop loss, like right here, well, then your average trade is going to have this much room for profit. Like, it's going to look like this. So for every 100 that you trade, right? For every 100, like, let's just say this stopped out, right? And you have this design so that if you stop out, you lose $100. That's how you do this, right? It's like, okay, if I stop out, I'll lose 100. That's how position sizes are created. The stop loss is determined using the chart and using your algo. So you're not moving your stop loss because, I want to do 100 this. The stop loss is based purely on the algorithm, right? Maybe it's 1.5 ATR below the stop, whatever, or in this case, above the entry, 1.5 ATR above entry on a short, below entry on a long, whatever your reason is, whatever your rule is for your stop loss, there's your stop loss. Now, in this case, it's not that you're going to shape your profit because you like 1.6. That's not how it works. In this case, your take profit point is going to be determined by your algorithm. So if your algorithm is, say, like 2 or 3 ATRs, right? I mean, because when you're doing computer stuff, that's kind of how you have to do things. If you have it set as an ATR, then that's just going to be the average of what it is. Your 1.6 ends up being the average. It's not that you're shooting for 1.6, is that you have a minimum. It's like, hey, I need my risk to reward ratio to be at least 1.2. That's what I need it to be. But you find that through your algorithm, after you've tested 200 times, it comes out to 1.6. You understand? So, your rules based on whatever your take profit is, It might be that your manual algorithm as your take profit is going to be at the 618 fib. Maybe it's just that simple, right? So in this case, your take profit would be pretty much right where I have it, right? But on a shorter impulse, that might be tighter. So sometimes it's 1.3. On a longer impulse, it might be 2.0, but it's going to average out to whatever it averages out to, right? So let's say that you've done all your testing and you have a 1.6 risk to reward ratio on average, right? And now you're going to find that your hit rate is going to be 68%. Let's say that you win 68% of your trades, right? So hit rate is 68%. So you're going to find out what's called your expectancy, right? So on your average risk to reward ratio trade, 1.6, that means that you're making $160 for every 100 that you risk. But that only happens 68% of the time, right? So your expectancy, you've met your minimums, right? Your minimum was 1.2 for risk to reward. I'm just pulling that number out of my hat. Your hit rate, let's just say you have your own minimum of 65%. You're determining this because you know you're going to risk, you know that you're probably going to have this many trades in a week based on your algorithm. You know, you have a certain income target, right? Whatever that is. So you got to kind of mess with the numbers. You got to test your algo to find out how many trades a month you're getting. Let's say you're getting 5 or 6, right? So then you have to know, okay, I got 5 or 6 opportunities a month on average, right? So I need, in order to make the income I need to make, I need to have a minimum risk to reward of this. I need to have a minimum hit rate of that. And if you get these two numbers, you multiply them together, you're going to get what's called expectancy. And that is 1.6 times 0.68, which is 68%. And that's going to equal, probably something like $115. Let me see. 1.6 times 0.68. 1.6 times 0.68, $108, really 109. So it's 108.80. So what that means, your expectancy being 108.80, that means that every time you take a trade, the average amount of money you make is 108. When you lose 100, when you make 200, when you make 210, when you only make $20, whatever your number is, whatever happens overall, if you've tested this, then based on back testing, you can expect to make $108 every time you press that button on average. That's counting the losses, that's counting the wins, and that's you risking $100. So for every time you click the button, risking $100, you're going to make 108, right? Now, this can be modified. Maybe you add another dimension to your algo, but you do not do that until you have done this. Until you back tested, and ideally you forward tested. Because once you've back tested 200 times, the next thing to do is to actually forward test at what you could call, I think Elder calls it toy money, but it's just, money that you don't care about. It could be like a quarter position size, or, it could be a small amount of money. And you make sure that it works in real life, because real life trading is different than back testing. It's incredibly different. One of the things that makes it different is that there is the psychological component, right? So you're actually risking money. You're going to act differently. You may not trade properly. This is why trading algorithms are so valuable, because you're now letting the math take over, and you either enter the trade or you don't, right? It's that there's no like chasing bad trades. It's like, okay, the rules are met, you enter the trade. The rules are not met, you don't enter the trade. That's really how you should be trading anyway, but we're human beings. We cannot purge ourselves of emotions, right? Otherwise we'd be psychopaths, or at least sociopaths. But the point here is that algorithms are good like that. Now, if you can be strong and trade manually with your algo, and the rules are met, take the trade. The rules are not met, don't take the trade. Simple as that. Then you will probably perform better over time than if you're trying to be intuitive and like, that's almost a good trade, and I did want that extra $80 this month. Like that doesn't work. And if you can have it coded and successfully coded, then you're really in good shape, because there's no human clicking the button. You're just either in or out. And of course, you have to make sure that works. You have to make sure your algo is properly coded. So, but yeah, that is a deep answer to your question about going back testing 200 times. Trev says, shortcut. Have you noticed TV have added? Oh no, that's not it. Trev says, forward testing with pocket money. I'm finding shifting lifestyle to suit trades and education itself. Yeah, that's the thing. I mean, look, here's the thing about it. Trading happens when the market lets it happen. So you definitely, if you're not coding your algo, and excuse me, most people haven't coded their algo, and that's fine. There's nothing wrong with that. Especially in the beginning, you don't want it coded. You want to make sure your algo is, you want to know what you're doing before you pay a bunch of money to have algo coded, right? We can do what we can to reduce the cost of coding an algorithm, but there's always a cost. And you want to make sure whatever you're doing works. And the only way to do that is to test. So, here we are. I mean, look, we're developing in the background ways to take an algo that's more formative, not tested 200 times, and to actually test it using the computer. I've showed you guys that like last week a couple times where I have an algo I know that is, I've proven it beyond 200. Beyond 200 back tests. I've gone way beyond that. But what I've done is I've coded all the different little options, or at least I've had it coded in there to where I can change the little options, right? I can do deeper ATRs. I can, I can account for a 3 pip spread instead of a 1.5 pip spread. I've had all these little options coded in there, and it's like being finished today. In fact, it's done today. And let me tell you guys a little something. I have my algo coded. One of the things that we ran into trouble with, and is that let me allow someone to join here. One of the things that has happened is that TradingView will not code to where that's funny. Yeah, totally, Trev. The 200 back test really gets the muscle going for sure. Like wax on, wax off. Yeah, it's good for you. So TradingView won't execute a trade. TradingView itself will not auto execute a trade, right? I think they don't want the liability because it's not that hard to code. But TradingView will have an API to your exchange, but it will not execute the trade. So I was working with my coder in the background because he's like, okay, if we want to code a trade entry using, say, I said you should look at a MetaTrader, because MetaTrader is another platform that I've used in the past. It's very, very popular. Like all the little crap exchanges out there, MetaTrader hooks up to them all. It's really built to hook up to any exchange you want. Like you can find these little exchanges where you can get like 1,000, 1,000 to 1 leverage. You can put your Bitcoin on there and trade assets that you're not supposed to trade or whatever. And MetaTrader hooks to all of them, and you can execute through MetaTrader. Right, so this is old school. Like you go to MetaTrader, I'll even show it to you. It's like, let me see. I don't know that I have it on my computer anymore. I haven't used MetaTrader in ages. There it is. Okay, let me see if I can get it open. So let me bring this up. This is MetaTrader, and it hooks up to all your exchanges. You can see I had at that time, a lot of these. See if I can zoom this in. Make this bigger view. Languages. Full screen. It is full screen. Looks like I won't be able to zoom this. I don't know. Maybe figure out later. But this is MetaTrader. Long story short, and so it's old school. You can see it's not as pretty as TradingView per se. But you can have a few charts running at a time. I've got here on the left a USD JPY. This is I was doing a lot of Forex at that time, and it hooks you up to. I can have like 10 different exchanges hooked up to this and execute through this. And so there is there's an actual there's like a Pine loader or something. I have to look up what it's called, but they can take Pine script from TradingView, transport it to MetaTrader, and allow you to execute that way. So that's the workaround is through MetaTrader. So instead of having to code C++, which is really expensive and difficult to code, my coder, who is just an absolute genius, was able to find a shortcut to that. And so now we have a way that's extremely affordable to develop your algo here on TradingView and actually execute, and it just goes through MetaTrader, which is a very trusted kind of third-party situation. So at any rate, that is kind of where we're at, and I think we're nearing the end of the show here. Let me check the comments real quick to make sure we don't have any further questions. No questions right now. V, do you have anything to add? I mean, I know I just went through a bunch of pretty heavy technical kind of level stuff, but
no, no. This is great. I know I don't have nothing to add. I mean, you did a great job, folks. Go back and look at this video, take notes on it. Anything you're confused about it, write it down and bring it in for the lab. The next lab that we do, bring those questions, and we'll work through the trade to be set up properly.
Yeah, there you have it.
Three people typing.
Yeah, no, that's good. That's good thing there. If you have questions, like that's why I record these, and we have all the recordings back to the beginning still. I haven't erased any of them. So if you go back to the earlier in the what do you call this thing? Telegram. If you go back to the early Telegram, you'll see all these videos are still up there. So if anybody needs any links, I could get it to them. And what's TOS, Kevin Shepard? What's TOS? Need to know what you're asking me. TOS. Mark, what is this? But yeah, it's it seems like people from your comments right now, it seems like you did like what I showed you today, so that's good. I know for a fact though that I did go through some of these things a little quickly, so like I said, I'll post the video here in the next few hours, maybe even the next. If I could do it quick, I'll do it quick. But in this case though, if the review of the video is not enough, go ahead and ask questions. And Thinkorswim, Kevin Shepard. Yeah, Kevin, I don't know. So are you trading stocks then? Can you connect to Thinkorswim? I don't see it here's the problem with Thinkorswim. It's not one of the TradingView brokers. So if what you can do for stuff that you'll find on Thinkorswim is going to be I'd say your closest competitor that links directly to TradingView is going to be Interactive Brokers. But then again, the real question is, can you execute Thinkorswim through MetaTrader? If MetaTrader hooks to Thinkorswim, then I think the answer would be yes. So the question you have to do some research on is whether or not MetaTrader hooks up to Thinkorswim. That's because I know for me, MetaTrader does hook up to Oanda, which is what I use for my which is what I use for Forex, and that's what matters, right? And then there's a lot of options out there that MetaTrader hooks to for crypto. So that's why I like MetaTrader, because that's a good filter out. But for Thinkorswim, what you have to do is ask over. I think that's TD Waterhouse, or I don't know. I think they call themselves Waterhouse anymore, but it's I think Thinkorswim is like TD's TD Ameritrade. I think they are now. I think Thinkorswim is their platform. So yeah, ask them. Do they hook into MetaTrader? Chances are they do. I'd be surprised if they don't, but then again, I wouldn't. I'm not surprised about anything anymore. But yeah, that's it, everybody. So V, if you have questions, ask. I'll get to it. I'll get to it in the chat. But for now, V, can you give us that Guerilla send-off?
Absolutely. Thank you all for listening in and listen. Keep plugging away, keep grinding it out, and develop your grind, perfect your hustle right here. AlgoFactory.tech. Enjoy your weekends. Take it away, Cowboy.